Good morning, everyone. It's Wednesday, October 5th. It is 7:25 in the morning, and I just want to recap over the charts of what took place yesterday. So if we take a look at the US dollar index, we've got the 60-minute chart zoomed way back to go back several months here, and you can see that we've finally pushed right up into this key resistance zone. I was pointing out just visually about the 80 level would be a pretty key one that's in the middle of this range from back in 10 to 2010. And the fact that it's in the middle of the range, that's where the average price will be held, and that'll be the key resistance zone. On top of that, I pointed out that we've got these three pushes. Usually you get three surges to a high, and right now the trend is still up, but we have hit the key resistance zone, started to pull back, and this looks like we're at the third key high. So if we were to just draw a quick, I'll just zoom in a little bit here. If we were to just draw a quick trend line, we still have some good support down here. It is trading down to a short-term support zone. This morning it's pulled back, but if we break this trend line in the next little bit, then we could see the US dollar come tumbling down somewhere into first key support zone would be the 76 area. After that, it would be somewhere down into the middle of this range around the 75 area. And of course, a falling US dollar should boost stocks and commodities. So that's kind of where we stand right now. The question is, how does the US dollar pull back, and what does it do when it hits this support trend line? We might see it actually pull back and then actually kind of run up in a little bit of a channel here, which would be a bearish flag. You'd have a move down and a bear flag, and if it kind of runs up the trend line like that, eventually it should break down and actually start to have a pretty sharp fall to the downside, simply because there's going to be a support trend line break, which will trigger a lot of people to exit their position. There'll be a pivot low somewhere down here that it'll trigger, and then there'll be another pivot low, and another pivot low, and that should wash the dollar right out and sell it right down. As it starts to fall, it'll just start to trigger sellers, and of course it'll just pick up momentum and come straight down. So that's kind of where we stand on the US dollar. Right now it is still in an uptrend. It is at support. It still has some room to go before it actually would break any really key levels. But the fact that it's had such a nice run up, it's had three surges, hit key resistance right up here or fairly close to it, is it telling me that it could be reversing. And we had a strong closing price on equities yesterday, which also kind of signifies that possibly the US dollar is trying to put it in a top, which could play out over the next couple weeks still. It doesn't mean it's going to happen right away. This could take still another week or two to unfold. So let's jump to the commodities, see what happened yesterday in crude oil. This is the 4-hour chart zoomed out a couple months, and more or less crude oil made a new low, and here's the key low, which it pierced yesterday, and it's trying to hold back up against that price. I did point out eventually, once we had, I pointed out a while back that if we get a pierce to this low, it'll actually probably be pretty significant. Simply, it's going to wash the market out, and anybody who is going to exit their long oil positions there would get shaken out, and then we could actually see it start to put in a bottom. So just kind of looking at this chart here, we've kind of got a little bit of a falling wedge. It'd be almost nice if we could get one final really push and break to a much clearer new low, and then from there we could actually see crude oil bottom. But overall it looks oversold here, and there was some good buying the past session and a half, and we are down at a support zone, so we'll see how that plays out. As for precious metals, here's the gold chart. This is the 4-hour chart of gold, and it's continued to play out just as I more or less anticipated a couple weeks ago. It's trading within this zone right here, and I figured it would do this for a while, and we might actually see it come down and dip and possibly even pierce this low. But gold, I pointed out, also does have a lot more support than silver, and it might not actually, it might just continue to trade in this range as it starts to base and regroups before it moves back up to my target of the 75 area, which is also a pretty key resistance zone from previous price action. So I'm just keeping my eye on gold and silver. I am starting to like it more and more here, but yesterday, even with the falling dollar, we saw gold fall with it. not a really good sign overall. So I'm not too antsy about getting into gold quite yet. If you can see down here, all the big spikes in volume are pretty much red, indicating there's still some pretty good distribution in gold. And yesterday we saw a couple good spikes also in gold of sellers. Looking at the silver chart, this is the 4-hour chart again, and of course it zooms back several months, so you can just see the high and the pullback that we've had. Silver's looking pretty bearish still. It looks like it wants to continue to go further, and the past couple sessions we've seen a couple little bit somewhat of bottoming tails where the price goes down and gets bought right back up again. It started to slide a bit this morning, went down, got bought right back up again. But again, if you look at the recent volume spikes, they're pretty much all red, indicating there's still distribution. It's silver, and it's trying to base in this consolidation period. Now we do have this, had a little bit of a breakdown yesterday. In silver, we saw it break down, came back up, hit that resistance level, and it's rolling over again this morning, going lower. So in the grand scheme of things, I do feel as though there's still some pressure on metals, and we might actually see silver kind of roll over a bit and maybe even make a new low. And once it does, this type of price action here, if it'll just grind its way lower and flush out this bottom, break this low here, then we'll most likely see silver bottom pretty quickly afterwards. And from there, I think we'd have an amazing entry point into silver. Now taking a look at bonds, this is the safe haven a lot of people, big money has been going into. And I've zoomed out. This is a 4-hour chart, so we can see a lot of intraday price action of peaks and highs. But you can see, I zoom back, we can see the low that we had after the big bear market crash there in more or less 09, 08 there. We saw bonds reach the same price again. That's where we're reaching. They actually pierced that level. So we were at a pretty extreme level for the bonds. And this is one of the reasons why I've been pointing out recently that we're getting to the point where it could have a pretty strong reversal. Now you can see exactly what happened last time. It went up. Usually something that goes straight up usually comes straight back down. And it's more or less a pretty parabolic move. We've had to move straight up. We did break this previous high, and there is a very good chance we could see bonds come crashing right back down, and it could be a phenomenal play using the TBT inverse fund, meaning our TBT fund would rise as bonds fall. And this could play out over a few months, 2 or 3 months. So it could be a really good play going forward. If I zoom in on the intraday charts, you'll actually notice, just to bring it back over here, you notice that price action has been getting very, very choppy. It's been grinding its way higher. We had a big blow off top, came back down. We've gone back up for more or less a double top, and it has surged to a new high and starting to pull back. So the fact that we've got two pretty significant highs, and the fact that this one just pierced, we may still get one more push. I like the three surges to a high. If we could get one more push to a new high here, I think we might have an excellent opportunity, or possibly this is even a double top. We might actually see price come down and have a little bit of a bear flag, and we might actually be looking to short on a pause if we see continued move today. We want to look for a little bit of a pause and a bounce, and we'll take a short position using an inverse fund, and we'll try and play the big move to the downside where there's really good opportunity to lock in some big gains there. Now looking at the SP 500 for what happened in the overall stock market yesterday, we saw this is a 5-minute chart of the SPY ETF, and I'm zoomed out just one day. Now if I'll just zoom out a little bit more. Here you can see we had a big gap down in the morning. The previous day's close was there. We opened here in the morning, and as I pointed out previously, generally we always get a gap fill, and it might not be the day of, but you've got to anticipate some type of gap fill. So we saw prices, the selling momentum continued to carry over into the morning with some pretty strong volume, but then we saw some stair step action on its way up, and we got this gap fill, and it was pretty nice price action. There was some selling in the morning, but overall volume stayed high as the price started to move up, and we saw some nice buying spikes on the upside. And the fact that it went up in a stair stepping pattern like that with some volume behind it was kind of telling me as we went into lunch that, I'm starting to actually think this might be more of a bullish price action, as opposed to just some type of drift that's kind of just slowly working its way up on light volume, and then it gets stepped on big volume. It was kind of the opposite as what I wanted to see. It was a nice bullish legs higher, a nice five-way wave move up, and then we actually saw price just fade back down, and that fade happened on extremely light volume. It just continued to decline, and it was right about here when I sent out an update saying, you know what, looks like we got a nice bullish on a longer time frame. It looked like a nice bull flag. We went pushed up on nice volume, pulled back on light volume. So I was anticipating another move to the upside if that was going to take place. Anyways, the selling continued to just drift a little bit lower, start to get a little bit choppier. Bigger candles that usually signifies a reversal is coming near, and we are coming down into its support zone. And it wasn't very long after that alert that we saw the market just rip to the upside, and I ended up putting our stop in place right up here just to protect us in case we got this end of day rally, and that's exactly what we got. It was huge volume, and once we broke that high, it just continued to make that move with a strong short covering rally. Now, a short covering rally is simply, if we just zoomed out here, you would see the trend is down. And what people do is, as they get short anywhere along here, they start to put protective stops in place, meaning every pivot high, they're going to start to put stops. Everybody will pick different highs. I've got my strategy how I pick my highs. But anyways, what happens is they start to put their stops in place, and as soon as it broke the last pivot high, which is right here, which is where I put our stops, that's where I figured we're going to see stops start to get triggered, and for the short positions, meaning they're going to be forced to buy back their shorts, and so that puts extra buying power into the market, and that's what happened. As soon as we broke this high, it just continued to rip to the upside, and then we had another pivot high right here, which it cleared and shot higher. So you can see we've got lots, depending where everybody picks their pivot highs, there's a lot of little pivots where people can put their stops. So there's a great opportunity to see this market actually rip to the upside. I think the 16 would be a pretty good target, could go quite a bit higher. Now let me just zoom out to the daily chart to give you a feel for where we are on a much bigger picture here. Overall, if we were just to look back earlier, overall I feel as though we're right into this low area here. We've got a consolidation, broke to a new low, everybody's extremely bearish, and we're actually just had more or less a first day of possible strong rally, and I think it's going to still take some time to base. I think we're going to see the market maybe trade sideways in between the 112 and 120 area for a little bit, and then after that we could be off to the races with another huge multi-month rally. So we'll just see if that's how it plays out or not. We are still down in a strong downtrend, and we could continue just to go lower. So we got to be very cautious what we do here. Volatility is high, meaning there's big price movements on an intraday basis, and if you're on the wrong side of the trade, it can really sting you pretty quick, especially with these leverage ETFs. You can be down 5-10% in one day just because of a bad timing, or the market just happened to reverse really quickly. So overall, this is more or less the type of price action we are entering. We've got extreme low. Sentiment is very extreme, very similar to how it was here. We had a nice reversal up yesterday. Didn't close above the previous day's high, which is a significant thing. So we could actually see, just like what we saw over here, prices come right back down. We could just see some pretty strong chop action. Could go up to the 16 area, and for all we know, it could be another great shorting opportunity. Could go lower, or this is the other opportunity or thing that could happen here. We could see something just like we saw back in March, where we actually see sharp reversal, and we get a nice move up. You get a strong bullish pullback, which means you get a nice move up, nice pullback into a support zone. And we actually played this one buying a long position right down in here, and we caught this nice move to the upside. So there is a very good opportunity. Either one of these is going to play out, and it's just a matter of hoping we get the setup, a low risk entry point, and the price action confirms what we're seeing, and we'll get in and catch the move. Now, I don't always try and catch the bottom or the top. I usually I'm waiting for the shift in momentum to be clear on a couple different time frames, and what I go for is the meet in the middle, which usually has the lowest amount of risk. And once you catch a reversal, you get on board, you catch the nice surge, and then you tighten your stops. Eventually you'll get shaken out as it starts to roll over, but I go for this meet in the middle the majority of the time, and not try and pick the top and the or the bottoms and the top, simply because you want to stick with the trend. If this trend continues, then you would be in this trend for a really long time, whereas if you're trying to pick out and get out at a top, then you'll get out early, and this trend will just keep on trucking its way up, and you'll have gotten out thinking it was topping, but it could have just been a small pullback. So it's very important to stick with the trend. Usually when I get into a trade, if you haven't noticed yet, once we get into the trade and we get the first nice surge in our favor into like a key resistance zone, I take some money off the table, move our stop to break even, and we've got a nice free trade with money in the bank. And if the trend continues for a long time, we just continue to ride it. If it rolls over, well, we either break even on the second half, or we make more money as it continues to move higher, and we start to ratchet our stops up. Anyways, that's it for this morning. Oh yeah, I just want to show you the ES futures chart real quick here. This is a 24-hour clock. You can see the trend going down over the past week and a half. And what I just want to show you here is simply we've had some really strong volume the past couple of days to the downside, indicating panic selling, a lot of fear in the market, everybody dumping shares. This is usually the sign that the market is trying to put in a bottom, because there's just a huge, massive surge in volume compared to these previous days. And what we saw yesterday was some pretty big buying in the early morning, which I pointed out. We had the nice stair-stepping action to the upside, a light volume pull back down to put in more or less a bit of a double bottom, and then we just saw a huge volume step into the upside. And through overnight trading, we're seeing this bull flag form, and we actually saw it broke out just a little while ago, and it's continuing to try and push higher. So we've got bearish price action here, and now we've gone to bullish price action with volume confirming that there are buyers here. We have yet to break a real pivot high. We just broke an intraday high yesterday. So until we really break, if we can break up through this high and then have a nice some type of pullback, I'll be more inclined to be buying somewhere down here and catching the real trend. But right now, the fact that we haven't broken a previous day's high and closed above it, I haven't really considered this an impulse leg yet, more of a strong short covering rally that you got to be very cautious about after a long trend down. If you're not careful in a short position, you don't keep lowering your stops like we're doing, one of these kind of rip your face off rallies just kind of come out of nowhere. You could go for a wash and break and come back and realize you're just lost half your gains in 5 minutes. So anyways, that's it for now, and I'll talk to you guys in a bit. Bye bye.